Hello there. We are live. We are just getting started. So let me run the intro. We've got a couple of things to talk about. For low price stocks, what's the message? Here we go. And roll that intro. All right. Thank you very much for joining me. It is good to have you with us. We've got a couple of things to talk about today. This is Mitch Goldberg. You're watching Be the Boss of Your Money. This is about personal finance, which includes investing tips, business talk. We talk about all kinds of things regarding personal finance, credit scores, spending, financial planning. You name it, we talk about it here. I've been a financial advisor now for over 30 years. I've got a lot to share. I know a lot, and I love sharing it. I love making people better at investing in personal finance. I want to help. I want to share this. And, sometimes you will take what I teach you and do everything on your own. And I'm happy for you. And some of you will want to reach out to me for some help. And I'm happy to speak with you. Okay. There's no obligation just to ask for some help and just to talk. But that's how we do it, right? That's how we make the world go round. Just be helpful, give value, etc. I want to talk to you about a message here. There's four low price stocks that are giving us a very clear, distinct message. I'm a very big believer that there's a certain rhythm to the stock market and the economy. You figure the economy is, it's like your circulatory system, it's your heart, it's your veins, it's your arteries. Okay. But the noise it makes that you hear in the stethoscope, that's the rhythm of the market. So every day I take out that stethoscope, I put it on the heart of the market, and I hear it. It's telling us something. Is it skipping a beat? Is it beating too fast? Beating too slow? Is there something wrong? And this is what we do every single day. So I've got a message for you today, and it's an important message, and it's it's actually a very bullish and very optimistic message. And listen, so we try to talk about things like what could go wrong, what could go well. I have something for you that I just, I'm not here to be a cheerleader for the stock market. I'm not here to be a cheerleader for anybody except for you personally, and me and you and all of us. But forget the stock market for a second. Let's listen to what it has to tell us. So first of all, I want to say, wow, holy cow, what a rally we had today, right? I mean, last week the market went down pretty hard. Stocks went down hard. The week before they went down also, but last week was pretty rough. People were getting scared. We've got the election coming up. And, sometimes, if you watch Be the Boss of Your Money, my show, which is hopefully your show too, right? By the way, welcome if you're watching this in the live stream. I would love to answer your questions. So if you have a question, ask away in the comments. Words of encouragement, words of wisdom are always appreciated here as well. And if you're watching this in the replay, I'd like to welcome you as well. Ask your questions in the comments. I'd love to answer them. And just go ahead and ask as if you're watching this in the live stream. I will see the questions. I will get the alerts, okay? So last week it got pretty negative. And once I was talking to a friend of mine over the weekend. And, I said to him, sometimes the market goes up and then we assign reasons to it, or the market goes down and we assign reasons. But a lot of the time, we don't really know what those reasons are until after the fact, until some time goes by. So the reasons last week was, Biden is favored to win the election. And people are like, well, why would you want to buy anything before the election? Because if Biden wins, he's going to raise taxes, capital gains taxes, it's going to hurt the market. That's where the market's going down. I think that a lot of people who wanted to make any changes, I'm talking big institutional investors let's say the hedge funds, it's the mutual funds maybe. They made their moves last week if they wanted to do any last minute selling. But if you watch this broadcast, you know that I've been preaching. Don't make any moves just because of the election. I'm not making one single solitary change in a client's portfolio because of the election. No way. Listen, presidents come and go, but the stock market has shown a positive return under almost every single president since 1900. And people said, hey, when Obama became president, oh, that's it, it's going to be bad. When Clinton became president, it's going to be bad. Then people said when Bush became president, when Trump became president, it would be bad. Remember when Trump won the election 4 years ago, the overnight futures were down over 1,000 points and the world was going to end. And by the next day, the stock market rallied. So people make these knee-jerk reactions and it's emotional. Let's check your emotion out the door, check it out the door. So I've been saying I'm not making any changes to client accounts because of the election. We make the changes based on your personal finance needs. Are you getting closer to a time in your life when you're going to actually need your investment money for a goal? Are you closer to retirement? Maybe we need to take some money out. You closer to sending your child to college? We need to take that money out of the stock market. Those are reasons to make changes. But when you base your changes to your financial plan, to the stock, not when you make your changes to your investments or your financial plan, when you make these changes based on your unique personal finance, you're always right. I'm going to say that again, when you make changes to your financial plan or your investment plan based on your personal finance situation, your unique personal finance situation, you're always right because it was the right move for you. But when you make an investment change based on the political winds, which change like the wind, you're opening up yourself to a mistake. Maybe you sold, the market goes down, but did you buy things back? Maybe the market shoots up. Did you sell and maybe buy things back lower? Is that the game you're trying to play? I don't knock you if you are. But when it comes to your serious money, your money for you, for your retirement, for your family, I just don't condone that. I can understand making changes around the periphery. I can understand rebalancing. So market was up today. Let's just take a quick look at how things did. We'll do a quick share screen with perspective because you have to see this. You just got to see it. You got to see it to believe it. Okay. So today, stock market, Dow was up over 400 points, up 1.6%. S&P up over 40 points, up just about 1.25%. NASDAQ was up, kind of a laggard today. But the standout was the Russell 2000. The small caps up almost 2%. I don't know if you could see that on your little smartphone screen. And the VIX was off a little bit, off 2.3%. That's a good thing, by the way. You want the VIX, that red one you see there, you want that one to go down. That's the fear gauge, the volatility index. It basically tells you when it goes up or down, whether or not money managers, professional investors are looking to pay up or pay down for hedging. Okay. So that's what that is. We have someone out there in the comments. Hello there, Larry Kravitz. Hello. That's a hard game to win. I agree with you, man. It is a very, very hard game to win. And you know what? You could be right once, but when you're in that game, you've got to be right twice, and you've got to be right twice consistently, right? That's important. Thank you very much, by the way, Larry, for watching, and I appreciate you taking the time to comment. Thank you. So the message. So let's start the message in the market from these four low price stocks. The four low price stocks, first of all, just to get this out of the way, are Under Armour, GE, Ford, and Wabash. Of those four, Wabash is probably the one that you never heard of, and it It's important that you know about it because these stocks are so unique in their position in the economy. They tell us such an incredible message that, like, when I look at these, how could I possibly be bearish? Okay, can't be bearish when you hear this message. I am challenged. I should say I am challenged to be bearish. But do you notice that the industrials are up 1.6%? The Nasdaq was only up 0.42%. Usually it's been flipped the other way around. Usually what we see is the Nasdaq goes up a lot more than the Dow Jones Industrials. The Nasdaq goes up a lot more because, Amazon, Facebook, Apple, Netflix, Google, Microsoft, the same stocks you talk about here all the time. So I want to show you something else. Okay. This is the most important thing I look at every day. This is the ETFs representing the major sectors of the market. Look, energy was the standout winner of the day. Last week, energy was left for dead, and it's never going to go up again. Okay. Winner of the day. Building materials, but industrials were up. If you take a look at financials, strong day. But who is the weakest link? Communications, and that's XLC. By the way, half of that ETF is Netflix. It's Google, Facebook is half of it, and Netflix is I think 5% of that ETF of that sector, and of communications. And then XLK was only up 0.25%, the technology sector. So you had a flip here. And just to go back to something, why was the Russell 2000? Russell 2000, okay, is the small cap stocks. Smaller companies are more sensitive to the domestic economy. They're not the international companies. They don't have as much access typically to credit and to hitting the stock market and IPOs like big companies. Just big companies, even big bad companies, have a way of always raising new money to survive for another day. But the smaller cap companies don't have that same ability. So they're very sensitive to the swings in the economy. So when you see the small cap stocks up almost 2% today, it's just such a big difference from last week. And that says there's a message that investors are optimistic about the economy. And that's really important. And why? We have an election coming up tomorrow. And everybody's saying, well, if Biden wins, it's bad. If Trump wins, it's bad. But if Biden wins, it's good. If Trump wins, it's good. So let me explain something to you about how to versus each one, how to compare their economic plans. Okay. It's been said that Biden is more expansionary because he'll have he wants a bigger stimulus plan. If we get a blue sweep, we can get a really big stimulus plan. It's expansionary. It's good for the economy, good for employment, et cetera. But let's not forget, Trump is very expansionary also. I mean, you can't say he was bad for the economy. And I want you to know that, I have my notes here, but this is like crazy. I mean, retail sales came out today. They did not disappoint. Retail sales were way stronger than anybody expected. In fact, retail sales right now in this country are really booming. And not only they so strong, that's after everybody said when the effects of the CARES Act goes away. So retail sales are really strong. By the way, a lot of that driven in the automobile market. Okay, so I have my notes right here. So retail sales, though, are very, very strong. That's a really good sign. The consumer is strong. The consumer is 2/3 of the economy. So we haven't seen that backwards slide yet due to the rise in COVID cases in this country yet. So people are shopping regardless of COVID. And the other thing is this: U.S. manufacturing. Not only did it hit a 2-year high, okay, it hit a 2-year high. I mean, think about 2 years ago. Wasn't the economy better 2 years ago than it is now? Manufacturing is booming all of a sudden. Manufacturing. And new orders came out, the highest in 17 years. I thought the economy was about to collapse. I thought everything was falling apart, and it's game over. Manufacturing, for new orders in manufacturing, highest in 17 years. What's driving it, though, is the automobile market, in particular, trucks, which is one of the reasons why I'm talking about Ford. Okay. So we've had really strong economic numbers in spite of everything that we've been hearing. Okay. I'm not trying to get into the politics. The election's tomorrow, but these are the numbers that are out today. These are the latest numbers and the last of the big numbers before the election tomorrow, but or at least election eve today. I know like somewhat half the country already voted. I'm voting tomorrow. That's my thing. I'm going on election day. I'm going first thing in the morning to my polling place, same place all the time. And that's where I'm going. So maybe the market is telling us something today that whoever wins the election, once the uncertainty goes away, investors will feel better. But both candidates, President Trump, Vice President Biden, both are actually pretty good for the economy. They do it differently. I do think that Trump, with the $1.6 trillion the corporate tax cut he had, the Jobs Cut and Tax Act, the whole, not the entire thing went to the corporate tax cut, but his is expansionary because it helps companies make more money, and they use a lot of that money for buybacks, things of that nature, financial engineering. Whereas Biden's plan is probably better for labor because it's more stimulus for jobs, if maybe he'll do something in the I think either president wants to get something done for an infrastructure spending bill, but they're both expansionary, and for investors and for the economy, they'll both, I think, be pretty good. And I think that is the message in the market, that don't get too negative. Both of these presidents could actually be very good for the economy. I understand. Oh, but if Biden raises, capital gains taxes, not that many people own stocks outside of a retirement plan these days. And even people who do, most of their money is in their retirement plan, in which case taxes don't matter, because when they take their distributions from their retirement plans, they're paying income tax, not capital gains tax anyway. And most of the money outside of retirement plans are in the hands of people like Jeff Bezos of Amazon, Mark Zuckerberg of Facebook, people like that. Okay. So we could see a downtick from a rise in capital gains, but it's not a death knell to the stock market. I don't think it's a death knell. That's my opinion. Okay. We don't even know what's going to come out. It's one thing to say you're going to do something with taxes. It's another thing to actually get it through Congress. And we have to see how things turn out. But these are what's going around now. Let's take a look at these four stocks, and I want to give you the message, and we're going to get out of here. Okay. So let's just do the quick share screen, and I want to show you exactly what I'm looking at. Okay. So first of all, let's take a look at Under Armour. Stock is $12 and some change. Okay. Under Armour just received an upgrade today from a firm called Stifel, improving fundamentals. They just had a phenomenal quarter. CEO says the customer has returned. They're shopping. And they earned 26 cents a share versus expectations of 3 cents a share in their last quarter, plus revenues beat as well. Under Armour was, $7 recently? But it's still a low price stock. The market cap on it is still pretty small, $5.8 billion. That's considered small by today's standards. What's the message? The message is that consumers are spending on retail. They're spending on apparel, not just any apparel, but they really like footwear. And that's what Under Armour made their quarter on, is selling footwear. And that's their bread and butter. So the consumer is coming out good. Here's the low. I don't know if you could see that on your screen, but 6 is the low, 19 and change is the high. But they had a good quarter. Fundamentals are turning around. Let's take a look at GE. Now, I put out a video up, I'm going to say about 3 years ago, to say I don't like stocks at lows. And I cited GE and Ford as two stocks that are too early to buy, that I don't like them because they're at the year low. These stocks have been trading in the sevens, around the sevens, give or take a little, for years, GE and Ford. But GE, just it's the industrial conglomerate. Their message is that they beat on the top and bottom line, caught some upgrades, and all of a sudden, after a few years of being down and out, and a chart that went down and stayed flat for years, all of a sudden, everyone who could have, should have, would have sold it by now is out. And then you've got a company with rising earnings, improving fundamentals. But it's an industrial conglomerate. So if all of a sudden they're doing better, and I just told you that the manufacturing numbers have improved, new orders are the highest in 17 years, and GE is coming out with better than expected numbers. I'm citing GE because it's such a down and out company and a down and out stock that if they're seeing an improvement in their own fundamentals, and also after years of cost cutting and restructuring, the message to me is that industrial conglomerates are saying things are improving in the economy. And let's get to Ford. Ford is in the sevens. Okay. Stock had a nice little pop the other day. They earned 65 cents a share versus expectations of 19 cents on the sale of trucks. GE basically got out of the car business. They have the Mustang. That's it. But everything else they sell, are SUVs or crossovers, pickup trucks. Number one selling vehicle in the United States is what? It's the F-150. So Ford is killing it at the right place at the right time. I consider all of these value stocks, and I'll tell you how I define a value stock in a moment. And then there is Wabash National Corp. Have you ever heard of Wabash? It's a very small company. Market cap is $785 million. So it's a really small company. Okay. I know what you're thinking. Like, $785 million doesn't sound so small, but in the world of the stock market, it's tiny. But what Wabash does is they make the trailers that go behind the tractor. So you see a tractor trailer going down the road. You've got the tractor, the thing that the driver goes in, right? And you've got the trailer where all the cargo goes. When you see the next time you're driving down the highway and you see a tractor trailer going by, look for Wabash, Wabash. There's a Wabash plate on the back of the trailer, or like at the bottom of the trailer, like right above the rear wheels. It's usually a red logo. The logo is the shape of the United States with the letters Wabash that go across it. And now that I told you that, you're going to see this all over the place. They are a very big manufacturer of trailers. Stock was in the sixes. It's coming back up, but the economy is starting to improve. And this tells you it is, because there's no better indication of improving economic fundamentals than things that have to do something with trucks. Everything goes on a truck. There's nothing that you have that wasn't on a truck before it got to you. But they make the trailers. And there's a company called PACCAR. I don't know if you've ever heard of PACCAR, but their biggest brands for PACCAR are Peterbilt trucks and Kenworth trucks. Like what 90% of the trucks I see on the road are Peterbilt or Kenworth, right? And you see some Volvos too, but those seem to be, the big ones, okay? PACCAR just had a very, very strong earnings and revenues report. Not only is the stock trading right off its 52-week high, but PACCAR is right near its all-time high. Could you imagine a truck manufacturer near its all-time high in this recession? It tells you that investors are gearing up for improving fundamentals. With stimulus, low interest rates, it tells you that there's a setup coming up for 2021 that you could expect an improving economy. In fact, a strong economy. So the fact that Wabash makes the trailers that goes on the back of these tractors, Wabash is telling you another story. It's the same story, but in a different way. So you take a look at Under Armour, the consumer is spending on apparel. GE, industrial side of the economy, manufacturing side of the economy. Ford, consumer discretion. Well, Under Armour's consumer discretion also, but Ford making trucks, and people are buying them. and people are buying them in huge quantities. They're just flying off the shelf. So that's trucks. So that tells you the consumer is in good shape. It tells you that businesses are in good shape if F-150s are selling also. And then you have Wabash, which has to do with trucks, which is the heart of the economy, the transportation economy. You take these four stocks, positive earnings and revenue beats, improving fundamentals, and these companies are all this is the key here. These companies are all very, very sensitive to the economy. So the fact that these stocks are getting a lift, showing positive and improving fundamentals, the story it tells you is the economy is actually doing a lot better than people think. People expect the economy to do well, even with the rising COVID cases. Thank you so much for watching. I hope this message finds you very well. I hope you voted. If not, vote tomorrow. And it's going to be one of the most interesting weeks of 2020, which has already given us so many interesting things to talk about. Not interesting good necessarily, but interesting. Okay. I'll see you tomorrow on Election Day. Thank you very much for